Hey, this is Asha. I want to thank you so much for joining me in today's video. Today we're going to take a look at buying the dip in Carnival, CCL. So should you go ahead and do it, or let's take a look at the charts and evaluate them. Keep in mind, none of these are recommendations to buy, sell, or trade anything, just my own personal thoughts and opinions. All right, so let's kick things off here. And as we go into this, I want to show you here is CCL. And if we go in and just take a look at CCL stock, you can take a look right here where today the stock is popping like 7% or so. But if you look at kind of like a 5-day, it's starting to kind of trend to the upside about 12% monthly and 6 months and year to date and even 1 year. You can see this overall trend. Here's the bigger problem that we've got. It's just going down on this downward trend line. And that's a big problem. You know, coronavirus, that kind of thing. 5-year, there it is. So it's just been on this downward trend. So you can see, okay, can we try and get a little bit of a upswing? So the question comes down to, are you short-term investor, long-term investor? I think for the short run, this could be good. For the long run, this could be good. For the medium term, it could be a little iffy, because in the medium term, what can happen is this thing can go up a little bit and then go and sell back off. So again, short term, maybe you could get this pop. Medium term, maybe you'll get a pop and then a pullback and some sideways action, and then later on you could get a pop. So that's where the short term and longer term could pan out. So as we look at CCL here, let's just look at the long term. Here is the overall, each bar represents a month. This is the monthly. So you can see this stock right here. We were kind of grinding to the upside a bit, right there to the upside. And we're kind of going in this kind of pattern, okay? So overall, this pattern was going. 2019 came around, and this thing just tanked, you know, starting to roll over, and then it just tanked with the coronavirus, that kind of stuff. So there it is. We just rolled back down. Now, we got this upside move right here, which started to look okay. You know, it's kind of sellers taking profits, meaning short sellers, and people buying the dip. So it started to kind of come back in. And then again, we're kind of starting to roll back over. So again, on the shorter term now, as we zoom in a little bit closer on the weekly, so each bar now represents a week. What you can see is right around that 17.5 price point. We've got a few support and resistance levels. So there's some resistance, here's some support, even though it doesn't touch it perfectly. You know, usually support is kind of our range. So when we look at kind of this range right here, we're kind of getting into that zone. So we've got a couple of spots right here where it's starting to kind of nibble and try to pop. I will say you're going to have some overhead resistance probably around these levels where we hit them in May and June. So that'll give you about that $30 price level. So once it starts getting into 30, if it gets there, you'll probably see a little bit of rejection coming in. Right now, you're getting a little bit of this bounce due to a few zones, a few buying levels. And that seems to be okay, but the volume is still not there. So this could just be a counter trend bounce where things are kind of bouncing up here, and then we'll see if we get some rejections. You do have some issues around the 25 and at the 30. So keep in mind, if you're kind of in the short term, you're willing to let it get to 30 or 25 or 30, you could kind of play these kinds of things, but these are types of things where they're for the trade, for, you know, a smaller time frame. Or if you're looking for the long haul, you know, if you're really looking at it from a monthly perspective, you're buying it over here from a dip perspective, back when it was in 2008, 2009 lows. So if you take a look at it that way, that's also another level to kind of take a look at. So right now you're getting it right around that level. So that's almost a 10-year pullback when you really think about it. So anyways, that's kind of my thoughts on this stock, is that I'd probably look into it for a short run or a longer term run. I think in the paper trading portfolio, I have NC LH. I don't have CCL, but it's similar in nature. That I put it on a little while back during this pop over here, and you can see we're also doing a similar kind of concept here. This one's had a different type of chart pattern, so but you get the point as far as these stocks go. These cruise liners are doing kind of a little pop here from maybe being a little oversold, and maybe things are less severe or crazy in the world where, hey, we're going to have this virus around maybe for the next 10 or 50 or 100 years, who knows? It just might be a less severe version of it. So Anyways, this is my thoughts and analysis here of this stock on Carnival. Again, looking at it from a short-term perspective, it could be okay. Longer term, it could be okay. Medium term, you have to be careful with the rejection of those $25 and $30 price points, because you could get that stock to pop and then it pulls right back into some support levels. So depending on your hold time, your risk levels on the investment, these are some of the key levels that I would keep an eye on and watch. Thanks for joining me. I'll see you in the next video.